Hi guys, welcome back to the channel, welcome back to a new video. This is the second update of today. If you like these extra updates, then please do me a favor, hit that like button, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram, those links are in the descriptions. Also in the description you find a handful of affiliate links. The first two is an affiliate link to Phoenix and Bybit. If you make an account there, after your initial deposit, you are getting a trading bonus from the exchange, so don't miss that out. Today's video is going about bottoms and bear markets and all that kind of good stuff, because a few weeks ago we made a video, Bitcoin bottom, when and where, and at the time we were trading somewhere between 30,000 to 35,000 if I am not mistaken. And today we are trading approximately at 20,000, and my bearish target was somewhere at between 20 and 25,000, because there was just so much stuff coming together between those two levels, and I said those are my bear market bottoms. But we already breached it once. We dipped down to 18k, so even those bearish targets were conservative. And now of course with new data coming in, I want to look again at those charts and say, you know what can we expect? And I'm going to be honest with you, the bottom and the period of this bear market might surprise you in a negative way. So let's start diving in. First, I am going to make myself small. As you can see, this is the YouTube channel. I just want to show you, in case you missed that important video, is this one, BTC bottom, when and where. It's a bit more than 20 minutes, but we're taking all kinds of scenarios by calculating how long it will take and how deep we can go. If you have not seen that video, definitely check that out. I'll also make sure that it will pop up at the end of this video so that you can just click right through. Alright, let me get that out of the way. We are only going to look at the BTC USD pair, because there's a few things that a lot of people are looking at right now, and therefore we're saying, hey, we need to start pumping up. One of them is the regular RSI, as you can see here. That's right here in the bottom. A few weeks ago we made a new low at 26.03, and we said that is a record low on the weekly RSI. Then we had a small green week in between, and now this week is again in the red, and right now we are approximately trading at 26.3 on the RSI. Which is of course still in a very low level. If we are zooming out on the monthly, then we are definitely breaking a negative record, meaning that right now that RSI is at 41. Never ever has it been low on the monthly. Just because this is so low, it doesn't mean right away new record to the downside, now we need to go up. It can stay at a certain level for a longer period of time. Let me take this out because we don't need that anymore. Another important level that a lot of people are looking at is the 200 week EMA. That's that thick blue line that you see right here. And in the past we have not really been trading a lot underneath. Yes, we had a just a short moment here underneath, 1 week below, the other week up, and then we just trend higher. All the other occasions in the past, the 200 week EMA served as a support, and then we went higher. But 2 weeks ago we started breaking that 200 week EMA. Last week we were not able to reclaim that, and this week we are going lower. It is now the 29th of June, so that means that very most likely we are going to end the month underneath that 200 week EMA. Another negative record here for BTC, and a lot of people are saying, therefore, since this has never happened, we will bounce up soon and we will go higher. But I do not totally agree with that. I'm going to show you soon what I mean. Now, in the last video, and I will not repeat that completely, we talked about lengthening cycles and why certain tops will not be as high anymore as in the past, and bottoms the same, because from the first top to the second top, I don't know, it was, let's say, 10x or 20x, and then the next top is a 7x and a 5x, 3x, 2x. So the curve does a little bit like this, but also then the bottoms are not as deep anymore. So from the current top that we put in here at approximately, was it 68 or 69, all the way to the bottom that we now put in so far, it is a drop of shy of 75%, which would be a little bit less than the previous bottom lows. But if we would take the same amount of percentage that we dropped the last few times, that was a little bit more than 80%, one was 84 and one was 87 if I'm not mistaken. Let's just take, to be sure, 85-ish. Then we would dump down from here another 50% from 20 to 10k, because this 85% down is approximately 10,000. Would of course be very bloody, but to be honest, where we now bottom out exactly, I don't really care, because when we moved from 50,000 to 51,000, it's only 1,000. It was barely anything, and of course it makes it's now 5% if we would go down an extra 1,000. But you know, on these kinds of levels, if there's just a few big wheels, they can easily pump and dump these prices 1 or 2,000 extra. So you know what the exact bottom is, I am not so interested in that. I'm also not in this game to guess tops and bottoms. It's useless. No one can do this on a consistent base successfully. It's much better to just trade it and trying to find signals and confluences at a certain level and try to trade those instead of guessing those are going to be exactly the bottom. Of course, anything could be a signal for us to go up. I mean, back in the days we had tweets of Elon Musk that set everything on fire. Now I think that effect has worn off a little bit, but you know what, it could be really anything. For example, he posted this just recently, is that Grayscale is going to ask to approve an ETF on spot. That means if that ETF is getting approved, that's the first spot ETF, they believe that they will succeed. If they do not succeed, they already said up front, we will sue the SEC for not approving this ETF. That will also be the first, and they have already had a few talks with the SEC, and they said we are absolutely not offering a more dangerous product than the future market now, right now with the CME. Matter of fact, we think it's the opposite. So if this will be approved, then a lot of people will also flock into this ETF, and a lot of money will come into the space. And one of our subscribers and said that will be then the shortest bear market ever. Yeah, most likely, because then suddenly a lot of money could jump into the sector. Doesn't have to be the ignition for us to go higher. By the way, next week is the result of the vote, if they will get the ETF or not. You know, it could be one of those triggers. Usually it is something that you don't really see coming, and suddenly boom, it's going higher. Now that we are a little bit further than our previous level, where we set around 30-35,000, maybe somewhere between 20-25,000 is the bottom, you could see that we were too conservative. We're going lower, and at this point of time, I have to say, I think that we can still go lower and everything will still take a much longer period of time. Why am I saying this? I'm going to show you exactly in the chart what I mean. Benjamin Cohen is a great TA analyst, and he said, and I totally agree with him, inflation, at the moment inflation tops out, that is usually when you see the markets going up again. Let me quickly go to screen mode. That's usually when you see the markets going up again. And in the past that always worked. Now that doesn't mean that inflation right away is over and we're going to 100k, yippee-ki-yay. That is absolutely not the case, but the S&P, the Nasdaq could be rising again at the moment that inflation is peaking out. Make sure that you just don't hang yourself up on just one number. If let's say the inflation now is 10 and next month is 9.9, don't say that was the peak, let's go. You make sure that you have multiple data points, multiple months or quarters in a row where you can really see, okay, inflation most likely peaked out, because you don't want to be caught up going all in 10%, 9.9%, that was it, and the next one is then, let's say, 10.5%. So be a little bit careful with that. Inflation on Wall Street used to say is like toothpaste. Once it's out of the tube, it's damn hard to get it back in, and I totally agree with that. So if they are rising the interest rates right now, let's say 0.5 or 1%, then you see the effect within 3 to 6 months. In other words, I already stated this multiple times before, 2 years at least, meaning December 2023, that is usually when we see inflation a little bit going down, because it takes a little bit more time before we see the real effect in the economy. Now that doesn't mean that right away inflation again goes from 10 to 2%. We can still in December 2023 be at 5, 6, 7%, but I think at least then it should be coming down already a little bit. So be prepared for that. With that being said, right now we are always seeing the same kind of triangle domino effect, meaning the news and the central banks are dominating. Whatever they're saying, whatever comes out, has an effect on the stock market, S&P, Nasdaq, etc. And that effect is then being rolled over with the dollar index and Bitcoin. So if the news is negative, you're seeing the stock market is going down, the dollar index is pumping as a safe haven, and therefore BTC is coming again, coming along with the stock markets and contra of the dollar index. That is usually now how it works. That it has already been like this for weeks, and I think it will stay like this for another weeks and months to come. Also the other way, of course, around. If inflation is going lower suddenly, then we will see markets maybe going up again. That is great news. Therefore, we're seeing a little bit more risk on coming off the dollar index into BTC, and therefore it will be going up again. So that is right now kind of the triangle domino that's constantly in place. One concern, of course, that we have, and that is unique in this situation, is that once it started rising interest rates, everyone knows, and also including the central banks, we're getting a recession. Meaning that revenue will go down, profits will go down, we'll get losses, we'll get bankruptcies. So the question is, of course, how much can these stock markets go up? Because it's also, of course, a representation of the underlying value of those stocks. And if a lot of these companies are then making a loss, then how much can the stock market can go up? There's, of course, an answer that really no one knows. We need to see what the future holds, but it's a very big concern for me. Knowing that BTC is a risk-on asset, and that means that its high beta will go up and down a lot. Can be interesting for trading, but can also be very, very dangerous. Therefore, I think it will take a long time before that asset is risk-on again, and then people will try to fall again to scoop up some BTC or are comfortable in holding it for a long period of time. Let's go into the charts because there's something else I'd like to show you. Of course, this is then the big chart. We're only going to do macro time frames. Here on the weekly, let's be honest, it just looks super ugly. Money flow is just slowly going out. This will probably continue for another weeks and weeks to come. We're seeing the green candles just a tiny bit within those red candles, so very weak. RSI is pointing together, VWAP pointing together. Everything is just ugly. If we are going to the daily, and this is actually more interesting to see, is if we're analyzing what we're seeing right here, it is actually also pretty bad, because we are constantly saying, well, it's going to be a relief rally. Well, if we are really looking at, you know what, let's take the 4 hourly, then we have a little bit more candles. If we are looking at what we have, and then let's take out this right here, and then we had the most traded around this level. Let's do this level right here until the top. Then we had approximately a 10% pump. Within a bear market, for an asset as BTC, a 10% pump is not a lot. I was actually hoping a minimum of 10, but more like towards 20, 25, 30% up, getting a lot of people trapped and then going down again. The fact that we are not doing that right now just shows risk off. Every pump is an opportunity to sell off and we're going lower. If we're just looking at the forming of the candles, so really just the price action of what we're seeing, then the tiny tops are coming in different sizes and shapes. And I mean, yeah, we have a bit here like a roof, and this one is just rolling over, a bit more like a rainbow. But we are not really seeing something that could look, and actually that is what you want to see in a bit of a relief rally, or just something that looks like a healthy retracement to the upside, is where the price does something like this and really just stair-stepping higher, because then you have consolidation, higher, or that we see a small accumulation, take some time, and then kind of blow off top to the top for a little bit and then just going down again. Actually, what you would also see in a regular market cycle, but so far we have not seen that yet. Instead, we just see kind of weird shapes, and every tiny pump, like I said, just being sold off to, we're going a little bit higher, being sold off to. Also, if you just look here in this cycle of this, these two tops, you see that these tops are almost the same height, so it's just very weak. If we're going back to the period when we were just testing over and over again that 29k, then actually you just see that every tiny top is still going down here again, up, sideways, down, up, sideways, down, up, sideways, down, up, sideways, down, over and over again. I mean, for a day trader, perfect. You have your levels, you can day trade it, but if we're really talking about when is the bottom in, market structure, when can we go higher, when are we bottoming out, yada yada yada, then I'm saying this is just very, very weak. Also in percentage wise, if we're looking, approximately 11 to 12%. Again, day trading range perfect, but for a macro perspective, this just looks very, very weak. So what I actually, like I just said, I want to see more stair stepping higher. Of course, now on the macro, we are seeing the exact opposite. We are just seeing stair stepping down. So where, you know what, let's also show this right away. Going a little bit sideways, going lower, sideways, lower, sideways, lower, sideways, lower. Here the same, sideways, lower, and now of course the question is, are we going lower again? To be honest, guys, because we're barely seeing any pumps, barely seeing any bulls, we have this mega big inflation ghost hanging around the markets, the central banks. Are we getting a recession? Are we getting, is the housing market going to cool off? Are we seeing more decline in the stock markets? What will happen to dividends? What will happen to the labor market? All these major subjects, there are still a big dark cloud around the markets, and therefore I think this might take much longer than planned. I would not be surprised if we're seeing more sideways action around these levels, or maybe let's say we drop another stage down between 15 and 10k or 20 and 15k. I have no idea. That at a certain point this will take maybe at least until the end of the year, or even maybe the next 12 months. Not of course said that we're going to do exactly in the last bear market where we saw a very long time 6k, it dropped down, very long time 3k, and then going up again. No guarantees at all. We have to see of course what the how many drops there are, but to be honest, like I said, I just completely missed the bulls. I missed the power. The news, the macro factors are just so negative that I just do not see this being resolved within the next few weeks or months. So I just want to prepare you that when I said between 20 and 25k is my bear target, and I really actually, the 20k was my favorite because that was the top 2017, never retested, said let's retest it and then go further. Now I'm thinking few weeks in, it's gonna look probably even more ugly, and we're going to see a few more black swans here and there flying over that will crash the market. And whatever event that might be, another bankruptcy of something, of a crypto firm, or maybe within the stock markets that has a rollover effect in crypto, I have no idea. But I think we are definitely not there yet. I'm not trying to scare you. I'm not trying to name numbers, this is the bottom, this is the top, absolutely not. But if we're just looking at the macro factors and everything that's in play and put it in a big bowl and trying to make a soup out of it, doesn't taste that good, to be honest. Doesn't taste that good. Alright guys, a little bit of a different video today. Hope you like it. Again, also really watch the previous video, Bitcoin bottom, when and where. I really appreciate it if you would like and subscribe. Click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram, I think I already said that. And check out the links in the description for VMAX and Bybit. Make an account, drop your money, you get a training bonus from each exchange. Thank you guys so much. See you very soon again in the next one. Bye bye.